We tested dozens of TradingView indicators so you don't have to, and this recap covers the very best of them. Today, we're breaking down 20 of the most powerful TradingView indicators we've reviewed so far in 2025, all ranked from lowest to highest, so you know exactly which ones stand out. If you missed any of the individual videos, don't worry, we've pulled it all together for you right here. Let's dive in. The trend channels, with liquidity breaks indicators, created by ChartPrime, identifies and visualizes trend channels in price action while highlighting potential liquidity breakpoints. It works by detecting pivot highs and lows, calculating their slopes, and creating channels with top, center, and bottom lines. When price breaks beyond these channels, the indicator marks these points as potential liquidity breaks, showing whether high or low liquidity was present during the break. The indicator offers customization options including channel length, visibility of the last channel, break confirmation weighting, line extension, and volume background coloring. Color schemes differentiate between upper, middle, and lower channel zones, with visual intensity reflecting volume activity. Primarily beneficial for trend-following traders, this indicator helps identify potential continuations or reversals. When price respects channel boundaries, traders might consider entering positions in the direction of the established trend. Conversely, breaks above or below channels can signal potential trend changes or liquidity grabs. Pros: pattern recognition, volume context, visual clarity. Cons: lagging response, parameter sensitivity, conceptual complexity. Ranking: 7 out of 10. The indicator offers strong trend visualization with added liquidity context, enhancing standard channel analysis. Best suited for experienced traders, as it requires tuning and technical understanding. Volume-integrated breaks provide valuable insight, though effectiveness drops in consolidating markets. Created by Zierman, this Pine script indicator applies machine learning principles to momentum analysis through a k-nearest neighbors (KNN) algorithm. The MLMI combines traditional technical indicators RSI and WMA with machine learning to create a predictive model. The indicator visualizes its predictions through a main line with a corresponding moving average, both displayed against a gradient background that highlights overbought and oversold zones. The zero line serves as the neutral reference point for momentum direction. Traders can employ this indicator for identifying potential reversals when the MLMI approaches extreme levels, particularly when crossing back from overbought or oversold territories. The crossovers between the MLMI and its moving average provide additional trading signals, with confirmation possible through the mid-level zero-line crossovers. Pros: pattern recognition depth, adaptive threshold calculation, signal diversity. Cons: parameter sensitivity, historical data dependence, computational complexity. Ranking: 7.3 out of 10. The MLMI delivers a sophisticated approach to momentum analysis by leveraging machine learning to identify patterns human analysis might miss. Its dynamic calculation of overbought-oversold thresholds adapts to changing market conditions, though its effectiveness depends heavily on proper parameter tuning and sufficient historical data for training the algorithm. Created by Chris Moody, the Ultimate Moving Average Multi-Time Frame 7 MA Types Indicator offers a comprehensive moving average solution with multi-time frame capabilities. It plots customizable moving averages that can display on the current chart time frame or be calculated from higher or lower time frames. The system supports 7 different moving average types, including SMA, EMA, WMA, Hull MA, VWMA, RMA, and TEMA, with options to display directional color changes and smoothing parameters for visual clarity. What sets this indicator apart is its dual moving average functionality, allowing traders to plot a second moving average with independent type and length settings. The indicator can highlight crossovers between the two moving averages with conspicuous yellow crosses, even when the second MA is not visually displayed. This creates a streamlined chart view that maintains important signals without unnecessary visual elements. A typical strategy involves using a shorter-term MA from the current time frame alongside a longer-term MA from a higher time frame to identify high-probability trade entries when they align. The color-changing feature helps quickly assess trend direction, while the crossover detection provides specific entry or exit signals that combine the insights of different calculation methods and time frames. Pros: versatility, visual optimization, customization depth. Cons: parameter overload, signal variability, visual complexity. Ranking: 7.3 out of 10. This indicator stands out for its flexibility and advanced multi-timeframe moving average integration, enhances decision-making with higher timeframe context, and clean crossover signals. While feature-rich to the point of overwhelming beginners, it offers experienced traders powerful customization for nearly any trend-based strategy. TPG, Buy-Sell RSI Scalp. Created by Trung Chu Than, this Pine Script indicator merges RSI momentum analysis with candlestick pattern recognition to generate scalping signals, specifically optimized for trading gold. It identifies entry opportunities using a combination of RSI extremes and candlestick formations, including engulfing patterns, hammers, shooting stars, and consecutive bullish or bearish candles. The indicator applies a 7-period RSI with aggressive overbought, 85, and oversold, 15 thresholds tailored for short-term scalping. When RSI enters these extreme zones, it scans for confirming price action to validate signals. Hammer and shooting star detection incorporates Fibonacci retracement logic using a configurable body size parameter. This ensures reversal patterns meet precise structural conditions, improving reliability over visual-only pattern recognition. Signals are only triggered when both RSI and candlestick criteria align, reducing false positives. The built-in alert system supports both manual and automated trading approaches by notifying users when valid trade setups occur. Strategy applications are ideal for counter-trend scalping in ranging markets, where price frequently rebounds from support and resistance zones. The configuration is particularly suited to the volatile nature of gold, with parameter tuning reflecting the asset's unique behavior. Pros: pattern combination sophistication, RSI extreme threshold precision, scalping time frame optimization. Cons: counter-trend signal dependency, gold-specific parameter bias, pattern complexity interpretation. Ranking: 7.4 out of 10. The indicator demonstrates thoughtful integration of momentum and pattern analysis, though its counter-trend approach carries inherent risks during strong trending periods. The combination methodology adds signal quality, but may reduce frequency, requiring patience for optimal entry opportunities. Volume-based buy and sell momentum by 2TM, created by Sion. This indicator combines volume analysis with price rate of change to measure buying and selling momentum based on relative volume changes. The indicator separates price movements into two distinct components based on whether they occur on increasing or decreasing volume. The calculation methodology tracks the cumulative rate of change, ROC, of price, but segments this accumulation based on volume behavior. Visually, the indicator displays the combined momentum line against its moving average, with color-coded fills showing whether current momentum exceeds the average, blue, or falls below it, red. This creates an intuitive visual representation of strength or weakness in the current price movement. Trading strategies using this indicator might focus on momentum confirmation, where traders look for alignment between price direction and the momentum color. In upcoming videos, we'll review a complete strategy featuring this indicator and others mentioned here, so stay tuned. Pros: volume-price relationship analysis, momentum categorization, visual simplicity. Cons: parameter sensitivity, signal delay potential, volatility distortion. Ranking: 7.5 out of 10. This indicator effectively translates complex volume-price relationships into a straightforward visual representation of market momentum. Its strength lies in distinguishing between price movements occurring on increasing versus decreasing volume, which provides deeper insight into the quality of market moves beyond what standard oscillators offer. While relatively simple in design, it captures essential market dynamics that help traders identify sustainable trends versus potential reversals. Created by Big Beluga, the Volatility Breaker Blocks indicator identifies potential support and resistance zones by detecting areas of high volatility around pivot points in price action. The tool generates color-coded blocks at these significant volatility events, with green blocks marking support zones, pivot lows, and blue blocks marking resistance zones, pivot highs. When price breaks through these zones, the indicator maintains shadow boxes that continue to serve as potential reversal points while marking breakouts with directional triangle labels. The indicator offers customizable settings including calculation window size, volatility sensitivity, and options to display retest signals or extend blocks to the right edge of the chart. Its core functionality revolves around the principle that volatility-driven pivot points create lasting market structures that frequently influence future price action, particularly when retested after initial breakouts. Traders might implement this tool as part of a support-resistance strategy, entering positions when price retests shadow blocks after breakouts. For instance, after a bullish break above a blue block resistance, a trader could look for buying opportunities when price returns to test this level from above. The indicator's built-in retest signals, optional dots, provide specific entry points for these scenarios, while the extending blocks help visualize how these zones evolve over time. Pros: zone persistence, visual clarity, adaptability. Cons: screen clutter, threshold subjectivity, signal delay. Ranking: 7.5 out of 10. The indicator transforms traditional support resistance into a dynamic, evolving framework that reflects real market structure, highlights volatility-driven zones, and retains broken levels with shadow boxes, offering deeper context than simple swing points. Though visually dense at times, it delivers actionable insights ideal for swing and position traders. The Momentum Shift Indicator by Big Beluga is designed to identify changes in market momentum using a smoothed version of the difference between current and past closing prices. It plots this smoothed momentum with color gradients to reflect strength and direction, while visually marking potential shift points with arrows and layering zones of rising or falling pressure. These zones are shown as bands above or below price, dynamically adjusting as momentum changes. The tool emphasizes clean visual feedback without cluttering the chart, offering traders a quick way to recognize when momentum may be strengthening or reversing. Pros: clear visual signaling, momentum smoothing, dynamic zone marking. Cons: label cluttering, lagging responsiveness, complexity and interpretation. Ranking: 7.5 out of 10. It provides helpful visual clarity for spotting momentum changes, but can become overwhelming in fast markets and slightly lags due to heavy smoothing. Auto Trendline Indicator based on fractals. Created by Doji Emoji, this Pine script indicator automatically generates trend lines by connecting recent fractal points identified through pivot high and low analysis. Fractals are detected using configurable period settings, and lines are drawn between consecutive points of the same type. Using a default 10-period lookback, the indicator categorizes pivot points as higher highs, higher lows, or lower lows. When new fractals form, they are linked to prior ones to create upward or downward trend lines that extend into future price action. Recent lines appear in full opacity purple, while older ones fade to gray. Users can customize the number of visible line pairs, extension direction, right or both, and fractal display options. Cross-detection monitors when closing prices breach trendline levels. The indicator calculates real-time trendline values using linear equations based on fractal coordinates and triggers alerts upon violations, signaling potential breakouts. This tool supports strategies such as trend continuation, when price respects trend lines, breakout entries on cross events, and confluence analysis where trend lines converge. Its automation removes subjectivity while ensuring precise and consistent trendline placement. Pros: automated elimination of subjectivity, real-time breach detection, historical line management. Cons: fractal lag dependency, whipsaw vulnerability, limited customization depth. Ranking: 7.8 out of 10. The indicator excels at removing human bias from trendline identification while providing systematic line management and breach detection. Its fractal-based approach ensures mathematical consistency, though the inherent lag in pivot point confirmation can delay signals in fast-moving markets. Created by Rafael Zioni, this indicator combines volume price trend VPT analysis with a modified supertrend calculation to generate trading signals. The indicator enhances traditional trend following by incorporating volume price relationships into its calculations. The indicator calculates a specialized volume price metric by tracking the relationship between price spreads, high-low ranges, and volume, creating a cumulative measurement that forms the foundation for its signal generation. This approach adds depth beyond standard price action analysis by incorporating trading intensity into trend identification. Signal generation occurs through dual mechanisms: primary signals when price crosses the supertrend line, and secondary TP, take profit, signals based on statistical deviations from a linear regression slope. The visualization includes color-coded trend lines, with green indicating bullish trends and red showing bearish conditions, complemented by explicit buy and sell labels at signal points. Trading strategies with this indicator might include trend-following setups where entries occur on supertrend line crossovers, with confirmatory volume presence. The take-profit mechanism offers natural exit points based on statistical deviations, creating a complete trading system. Conservative traders might wait for alignment between the supertrend direction and the EMA crossovers, blue and red lines, before entering positions. Pros: volume price integration, dual signal confirmation, built-in take-profit identification. Cons: parameter sensitivity, signal lag during volatility, complexity overhead. Ranking: 7.8 out of 10. This indicator brings sophisticated volume analysis to trend identification, offering traders both entry and exit signals in a single visual interface. Its integration of multiple technical methods provides more robust signals than standalone trend systems, though it requires deeper understanding to optimize performance across different market. Volatility Bands by DGT is a TradingView overlay indicator that measures and visualizes market volatility using a combination of standard deviation and average true range calculations. It builds on ideas from Bollinger Bands and Keltner channels, plotting dynamic bands around an exponential moving average or a logistic EMA depending on user preference. The indicator offers two main display options: a standard mode showing volatility and deviation bands, and a difference mode, which highlights a narrower volatility area. Users can adjust the standard deviation source, multipliers, and band display to fit their trading needs. It aims to signal potential trading setups when price moves outside the bands and suggests market consolidation when price remains inside. While it shares similarities with indicators like the squeeze indicator, volatility bands provide direct visual cues for trading opportunities without the need for additional momentum tools. Pros: flexible volatility visualization, adjustable deviation and volatility settings, optional logistic EMA smoothing. Cons: complexity and settings adjustment, limited standalone reliability without confirmation, slight visual clutter in difference mode. Ranking: 7.8 out of 10. It offers a thoughtful mix of volatility measures and flexibility, but setup complexity and the need for confirmation tools slightly limit its standalone effectiveness. Created by Lonesome the Blue, this Pine script indicator identifies potential trend reversal points through a dual system of setup and count methodologies, while providing support and resistance level visualization. The system monitors price action to signal potential buy or sell opportunities based on specific numerical sequences and perfection conditions. The indicator implements Tom DeMark's sequential counting approach with a 9-bar setup phase, followed by a 13-bar countdown phase. When price closes lower than its value 4 bars ago for 9 consecutive bars, it forms a buy setup. Similarly, 9 consecutive closes higher than 4 bars ago creates a sell setup. The system then requires these setups to be perfected by specific low-high comparisons before proceeding to the countdown phase, which tracks specific price action patterns to completion. For risk management, the indicator automatically calculates stop levels and potential targets based on true range and significant price points. It offers 2 entry approaches, conservative and aggressive, allowing traders to choose between waiting for additional confirmation or entering at the initial signal. The visual elements include colored markers for setup and countdown progression, along with optional buy-sell labels displaying targets and stop levels. Traders can use this system for swing trading in trending markets by waiting for completed setups and countdowns, or for counter-trend entries at extreme points. It's particularly useful for identifying potential reversal zones in established trends where conventional indicators might not yet show divergence. In upcoming videos, we'll review a complete strategy featuring this indicator and others mentioned here, so stay tuned. Pros: sequential confirmation through dual counting methodology, automatic risk-reward calculation, dynamic support, resistance identification. Cons: parameter optimization complexity, signal frequency limitation, learning curve steepness. Ranking: 8 out of 10. The indicator provides a structured approach to trend reversal identification with built-in risk management tools. Its systematic counting method removes some subjectivity from reversal trading, though it requires deeper understanding of the underlying principles to use effectively. The automatic support, resistance levels add contextual value, but optimal parameter settings may require significant historical testing across various market conditions. Bin-based support and resistance created by Steves analyzes support and resistance through statistical binning methodology. It divides the price range between highest and lowest points into 10 equal bins, calculating average price within each bin to establish support and resistance zones. The indicator calculates averages within each bin to identify recurring price levels, where market participants tend to make decisions. This approach processes the entire price action data set rather than isolating extremes, creating a more complete view of market structure. The visualization uses gradient-colored lines representing each level's relative strength. It calculates percentage success rates for both support and resistance functions, giving traders data to assess level reliability. The backtest methodology looks for bullish and bearish rejections at each level across the defined look-back period, measuring how often price respects these boundaries. Users can identify closely positioned SR lines that reveal consolidation zones, areas where price tends to accumulate before making directional moves. These clusters serve as decision points for traders awaiting breakouts. The indicator includes customization options, adjustable look-back periods, offset settings for projecting lines forward, and 3 display modes for backtesting statistics: on lines, in table format, or hidden. Pros: price action integration, rejection zone quantification, consolidation recognition. Cons: breakout susceptibility, volatility distortion, look-back limitation. Ranking: 8 out of 10. It combines traditional support resistance with statistical analysis, offering quantifiable reliability metrics for each level. Its bin-based approach adds mathematical precision while identifying key decision zones for traders seeking objective confirmation beyond visual assessment. The multi-timeframe trend indicator by Oxcali is a simple but practical trend tool designed to show whether price action is bullish or bearish across multiple timeframes. It compares a short-term and long-term moving average, defaulted to 50 and 200 periods, and displays the trend direction for each timeframe in a compact table on the chart. Users can choose the moving average type: SMA, EMA, WMA, or AMA, and customize which timeframes are shown. The indicator also calculates an average trend score, which is color-coded and summarized, and can optionally color the candles according to the overall trend. Pros: clear trend visualization across multiple timeframes, customization flexibility for MA types, built-in alert system for trend shifts. Cons: limited depth beyond simple MA cross logic, potential lagging effect due to reliance on traditional MAs. Table size could clutter smaller screens. Ranking: 8 out of 10. It provides clean, efficient, multi-time frame trend information with solid customization, but it is fundamentally basic and could benefit from more advanced or dynamic trend detection methods. Created by Gu5 Tavo 71, this PineScript indicator combines 3 technical analysis frameworks into a comprehensive trading system: EMA crossovers, trend channels, and the classic golden cross. The indicator identifies market direction by analyzing the relationship between faster EMAs, default 26 and 50 periods, alongside a longer-term moving average, default 200, that establishes the primary trend channel. The system creates a dynamic trend channel based on ATR-derived boundaries around the main moving average, allowing traders to visualize price action relative to the underlying trend. When price operates within this channel, the market is considered ranging, while movements outside signal potential trending conditions. The indicator then synthesizes this information with EMA cross signals to generate actionable trading opportunities, offering 2 strategic approaches: entering trades on direct price EMA crossovers, or restricting entries to periods when the shorter EMA demonstrates upward momentum. The system incorporates customizable stop-loss functionality based on percentage risk and provides clear trade signals through icon markers on the chart. Period restrictions allow traders to limit trading activity to specific time windows, ideal for session-based strategies. The indicator excels at trend filtering by requiring alignment between multiple timeframes and technical elements before generating signals. Traders can also enable golden cross detection between the medium-term EMA and long-term MA for additional confirmation of major trend shifts. Pros: trend confluence verification, signal visualization clarity, timeframe flexibility. Cons: parameter complexity, potential signal delay, repainting concerns. Ranking: 8.2 out of 10. This indicator delivers exceptional value through its comprehensive approach to trend analysis, effectively combining multiple technical elements that work together to filter market noise. Its clear visual presentation and strategic options make it accessible to traders seeking a complete system rather than isolated indicators, though optimal performance requires thoughtful parameter configuration based on specific market conditions and timeframes. Buy and sell indicator created by Shariam Or offers a time-based trading system that identifies high and low price levels at specific user-defined times, then uses these levels to generate trading signals when price later crosses them. The indicator allows traders to select a specific hour and minute when price levels will be captured, with comprehensive time zone support covering major global trading centers. This approach takes advantage of time-based market behavior, where certain hours often establish significant daily ranges. Once the designated time passes, the indicator marks the high and low prices with crosses, creating key reference levels for subsequent price action. Signal generation occurs when price crosses above the captured high level, generating long signals, or below the captured low level, generating short signals. The system incorporates an additional filter developed by Fakira that compares current entry prices with previous entry prices, only triggering buy signals when the current price is lower than the previous entry, and sell signals when price is higher than the previous entry. Trading strategies might include session-based approaches, where traders identify optimal times for establishing reference levels based on market openings or key trading sessions. The indicator works particularly well in markets with consistent daily ranges like Forex and indices. Pros: time zone flexibility, price action simplicity, mean reversion filter, Cons: time dependency, single reference point, parameter optimization challenges. Ranking: 8.2 out of 10. This indicator combines time-based market analysis with price action signals in an elegant but straightforward implementation. Its strength lies in capturing key reference levels at specific times, when institutional activity often sets daily ranges, though it requires careful calibration of the optimal capture time for each market. The mean reversion component adds sophistication to what would otherwise be a simple breakout system. Pivot Point Supertrend. Created by Lonesome the Blue, this Pine script indicator enhances the traditional supertrend by incorporating pivot point analysis for dynamic centerline calculation. Instead of relying on simple price averages, it determines trend direction using pivot highs and lows combined with ATR-based volatility bands. Pivot points are detected using a configurable period, and the centerline is calculated by weighting recent pivot values with historical data. This creates a more responsive, price-sensitive centerline that better reflects significant market levels and reduces false signals during consolidation. Upper and lower bands are plotted around the centerline. Trend direction follows supertrend logic. Price closing above the lower band signals an uptrend. Closing below the upper band indicates a downtrend. A built-in trailing stop adjusts dynamically with market volatility. Buy and sell signals are shown with labeled shapes when trend direction changes, offering clear entry and exit cues. The indicator is highly customizable, with inputs for pivot periods, ATR settings, visual components, and alert triggers. Strategically, it supports trend following with reduced whipsaw risk, swing trading near pivot-based support resistance, and breakout confirmation when price moves decisively from the center line. Pros: pivot point centerline enhancement, whipsaw reduction methodology, comprehensive customization options. Cons: pivot calculation complexity, parameter sensitivity increase, lagging signal confirmation. Ranking: 8.3 out of 10. The indicator intelligently combines two proven technical analysis concepts, creating a more sophisticated trend identification system. While the pivot point integration adds complexity, it addresses common supertrend weaknesses and provides multiple analytical layers for comprehensive market assessment. Created by Zierman, this Pine script indicator identifies trend direction and potential reversal points using Fibonacci retracement principles combined with structure analysis. The system dynamically calculates a Fibonacci trend line based on significant highs and lows, adapting as price action evolves across the chart. The indicator monitors price movement relative to key Fibonacci levels, with the default set at 0.382. When price breaks above or below the calculated retracement level, the trend direction changes, generating a new reference line. This adaptive approach creates a trend-following system that accommodates market volatility while filtering minor price fluctuations. Structure identification adds another dimension by marking significant swing highs and lows based on a user-defined look-back period. These structure points connect to form support and resistance lines, visualizing the underlying market framework. The optional Fibonacci channel expands on this concept by creating dynamic support and resistance zones around the main trend line using average true range calculations to determine appropriate channel width. The visual elements include color-coded price bars based on trend direction, structure labels at reversal points, and a comprehensive set of Fibonacci levels that provide potential targets and entry zones. An information panel displays the current trend status, price level, and trend start date for quick reference. Traders can use this indicator for trend following, identifying potential reversal zones, or as a dynamic support resistance framework. The system works particularly well for swing trading, where Fibonacci relationships frequently influence price behavior. By adjusting the Fibonacci level and structure sensitivity, traders can calibrate the system to match their preferred time frame and market conditions. Pros: dynamic trend adaptation, structure visualization, customizable Fibonacci relationships. Cons: parameter sensitivity, signal frequency variation, historical repainting. Ranking: 8.5 out of 10. The indicator offers a robust framework for identifying trends and potential reversal zones through mathematically significant Fibonacci relationships. Its ability to adapt to changing market conditions while maintaining structural context provides traders with both trend direction and potential reversal zones. The visual clarity and customization options make it accessible for various trading styles, though optimal settings require experimentation across different market conditions and timeframes. The Squeeze Momentum Oscillator by Algo Alpha combines squeeze detection with momentum analysis to identify potential market moves following periods of compressed volatility. The oscillator displays momentum through color-coded histogram bars, alongside a white line representing swing momentum, while simultaneously monitoring market squeezes through calculations of ATR and high-low differences. The indicator features customizable settings for momentum calculation lengths, squeeze detection parameters, and divergence identification. It visually distinguishes between normal squeezes, gray-orange columns, and hyper squeezes, yellow columns, with the latter indicating rapidly increasing compression. The momentum component uses green and red coloring to show bullish and bearish momentum, with intensity varying based on strength. Traders might employ this tool to anticipate breakout opportunities after periods of consolidation, particularly focusing on directional bias from the momentum components. The divergence detection feature adds another analytical layer, highlighting potential reversals when price action and momentum disagree. Pros: analytical convergence, signal clarity, customization, flexibility. Cons: parameter overload, signal delay, interpretation complexity. Ranking: 8.5 out of 10. This indicator earns high marks for combining volatility compression, momentum analysis, and divergence detection in one tool. Offers deeper insight than standard oscillators, highlighting both timing and direction of potential moves. Though complex, its rich visuals reward skilled users, ideal for swing traders targeting range-to-trend transitions. The Volume/Open Interest Footprint by Leviathan Indicator is a tool designed for traders who want a deeper look into how volume or open interest changes throughout each price bar. It displays granular buy-sell or open interest increase-decrease data inside each bar, allowing users to visualize market activity layer by layer. Users can choose between analyzing traditional volume or open interest, adjust the resolution for more or less detail, and optionally aggregate data from multiple exchanges. Additionally, the indicator highlights price levels where positive delta buying strength was significant, which could act as key zones of interest. Its settings are flexible, offering positioning, size adjustments, and customized color schemes for easier interpretation. Pros: granular market activity visualization, multi-exchange volume aggregation, highlighting of significant positive delta zones. Cons: complexity in initial setup, heavy resource consumption on high settings, limited usability for beginners. Ranking: 8.5 out of 10. It provides detailed and useful market insights, especially for advanced traders, but its complexity and performance demands slightly reduce its broader appeal. Curved Smart Money Concepts Probability Indicator. Created by Zierman, this PineScript indicator applies smart money concepts methodology using adaptive curved structures. It identifies structural breaks in the market and calculates probabilistic outcomes for change of character, shift of market structure, and break of market structure patterns. It also integrates premium discount zones, aligning with institutional trading principles. The indicator builds dynamic upper and lower bands using adaptive ATR-based calculations that respond to market volatility. Premium zone, top 10 to 25%. Potential selling area, discount zone, bottom 10 to 25%. Potential buying area, equilibrium zone, middle 45 to 55%. Neutral range with no clear bias. Visualization features include curved structure candles, premium discount zone shading, and probability tables displaying real-time win-loss statistics. Alerts notify users of structure breaks, along with associated probability data to support decision-making. Strategy applications include trend continuation trades at SMS/BMS levels within premium or discount zones, reversals at structure breaks with historically low probabilities, range trading between curved boundaries during equilibrium phases. This indicator enhances traditional SMC analysis by adding probabilistic filtering and adaptive visual structures. Pros: probability quantification, adaptive volatility adjustment, institutional zone integration. Cons: complexity overhead, lagging confirmation, false signal generation. Ranking 8.7 out of 10. The indicator successfully merges smart money concepts with probability analysis, offering traders statistical confidence in structure-based decisions. Its adaptive curved methodology represents an evolution beyond static SMC approaches, though the complexity requires significant understanding of institutional trading concepts. The probability metrics add valuable edge assessment capabilities for systematic traders. In our previous video, we reviewed 5 advanced TradingView indicators with strategies coming your way soon, so you'll definitely want to take note of them.